Hi students, in our previous class we discussed very clearly about bank reconciliation statement. What is the meaning of bank reconciliation statement and needs for preparing bank reconciliation statement? Actually, from that video you came to know what's the need for preparing bank reconciliation statement. Actually, the difference between cash book and bank passbook is cost. Because of this only we are preparing BRS called bank reconciliation statement. Actually, the differences it falls on timing differences, and another one is errors made by business or by the bank. So today in this video we are going to discuss very clearly about all the timing differences. Timing differences. When a business compares the balance of cash book and passbook, there is often a difference. This difference mainly caused by timing gap between the recording the transactions which is related to payments and receipts. The factors affecting the time include, for your better understanding, we are going to do role play. So you should think about you as a businessman. So you are a businessman now. From business point of view, you should play the role. Okay. First one is check issued by the bank but not yet presented for payment. But the check is not presented for payment still. When checks are issued by the firm to suppliers or creditors of the firm, that is immediately entered on the credit side of its cash book. However, the receiving party may not present the check to the bank for payment immediately. The bank will debit the firm's account only when the checks are actually paid the bank. Hence, there is time lag between issue of a check and presentation to the bank, which may cause the difference between the two balances. The businessman, you are the businessman and your creditor is here. To your creditor, you wrote a check. You wrote a check to your creditor. Amount rupees 1 lakh. Amount rupees 1 lakh portable check. As soon as you return the check to your creditor, you will credit your cash book. It is your credit cash book. It's the credit side of your cash book. So credit side of your cash book, all payments you will write. All payments you will write. So under the bank column, it is cash column and it is bank column. So under bank column, you will write the amount 1 lakh rupees. Because 1 lakh rupees worthable check you return to your creditor. Creditor name is Kannan. For Kannan, you wrote 1 lakh rupees worthable check. But Kannan did not present the check immediately to the banker for collection. So when Kannan is presenting the check to the banker, then only banker will debit that 1 lakh rupees in your account and he will credit that money to Kannan's account. Isn't it? But Kannan delays to submit the check to the banker. So in this situation, a time lag is there. So this time lag is caused by error. Second timing difference is checks paid into the bank but not yet collected. So you paid the check to the banker but banker did not collect because banker will take some times, nearly 2 to 3 days for collection. Collection period is there. Collection period. So about it we will discuss elaborately. When firm receives check from its customers or debtors, they are immediately recorded in the debit side of the cash book. So definitely as soon as we receive this check, what the businessman will do, you are the businessman, you should play the role for businessman. So you will write in the debit side of cash book. It is the cash book I have given down. So it's the receipt side called this debit side and it is the payment side, credit side, isn't it? So receipt side is debit side. You received a check. So immediately you will enter in the debit side bank column amount rupees 1 lakh because 1 lakh worthable checks you received from your customer or debtor. Your debtor name is Raja, for example. From Raja you received a check amount rupees 1 lakh. So in this situation, the increases the bank balances as per the cash book. Yes, definitely it is increasing the bank balances in the cash book because it is entered in the debit side of the cash book. Increases in the debit side of the cash book. However, the bank credits the customer amount only when the amount of checks are actually released. So it will take some times, nearly 2 to 3 days to release the check for collection period. The clearing of checks generally takes few days. Generally takes few days. Here itself they have given very clearly, especially in the case of outstation check or when the check are paid in at the bank branch other than the one at which the account of the firm is maintained. This leads to a cause of difference between the bank balance shown by the cash book and the balance shown by the bank passbook. You know that if the debtor who is being as a debtor, if they are having an account in different bank, for example, they are having an account in S bank and you are having an account in SBI bank. So for collection it will take nearly 3 days. So as soon as you receive the check from your debtors, you will enter in your cash book debit side, which is called receipt side. But it will take nearly 3 days for collection. After 3 days only, that 1 lakh rupees will be debited in his bank account and that will be credited into our bank account. So when it is crediting, our passbook will show exact amount what you have entered in your cash book, bank column, isn't it? Can you understand me? So this is you, it is you and your debtor or customer is there. Debtor or customer name is Raja and Raja wrote a check to you. Amount rupees 1 lakh worthable check it is. So you have submitted the check. As soon as you received the check, you submitted into your banker. But after submitted into the bank, definitely you will write in the debit side of your cash book. You are thinking it shows the credit balance which is increasing the bank passbook. Bank passbook already we have discussed in our previous video very clearly. So debit side of cash book and credit side of passbook is same. So debit side of cash book is the receipt side. So here you can write all the receipts which is directly by cash or by bank instruments. So you are receiving 1 lakh rupees worthable check from your customer or debtor Raja, and you have submitted the check directly to the banker on that day itself. So definitely immediately you will write in your cash book debit side. But this banker will take 2 to 3 days because Raja is maintaining bank account in different bank. S bank, that is a private bank that you know. But you are maintaining bank account in SBI bank, nationalized bank. So private bank to nationalized bank, at least 3 days it will take time duration to clearing the check. Check is the very safest instrument to transfer the money, isn't it? So it will take some time. So we have to wait till to clearing the check. But before crediting that money into your bank account, if you are entering your passbook, if you are looking at your passbook and your cash book, definitely it will imbalance. It will show some differences. So time. Third important timing difference is direct debits made by the bank on behalf of the customers. On behalf of the customers, bankers are doing directly debiting our bank's account. Sometimes the bank deducts amount for various services from the account without the firm's knowledge. Firm doesn't know about it, but banks are deducting without intimating to the banker. The firm comes to know about it only when the statement arrives. When bank statement comes, that time only the firms comes to know, oh, this much amount is debited by the banker for this money. Examples of such deductions include check collection charges. Definitely they will deduct some charges to collection of the check. And incidental charges, incidental trading activities, if anything are there, for that they are deducting some money from our bank account. Interest on overdraft. You know what's the meaning of overdraft? When your withdrawal amount is more than your available amount, that is overdraft. Bankers are giving overdraft facility for current account holder only, but within the prescribed period you have to pay for minimum amount of interest. So that interest on overdraft will be deducted by the banker directly without getting any permission from us, and unpaid checks deducted by the bank So unpaid checks, you presented the check, but bank didn't accept it. That is called unpaid check. So unpaid check is deducted by the bank and stopped or bounced. You might have seen the movie Kurivi. There are near about 50 lakhs worthable checks was bounced. So bounced check or stopped checks, etc. As a result, the balance as per passbook will be less than the balance as per cash books. Definitely it will show the timing differences. Fourth important timing difference is amount directly deposited in the bank account. So some genuine debtors are there. They are directly depositing the money to our bank account without any intimation. But after receives the bank statement called passbook only, we comes to know these many debtors are paid this much amount rupees into our bank account directly. But your cash book bank column will show fake information. Then after get the printed passbook only, we are comparing the both. Then we comes to know, yes, some debtors are there. They paid the money directly to our bank account. So there are instances when debtors called customers directly deposits money into our firm's bank account, but the firm does not receive the intimation from any source till it receives the bank statement. Till receives the bank statement, we don't know anything about amount credited into our bank account about it, isn't it? In this case, the bank records the receipts in the firm's account at the bank, but the same is not recorded in the firm's cash book. How we knows? We are not a god. What is happening around us, we don't know. We doesn't know about it, isn't it? So when we are comes to know about that passbook, that time only we are realizing yes, our amount is credited. As a result, the balance shown in the bank passbook will be more than the balance shown in the cash books, definitely, because it is not recorded in the debits side of the cash book, isn't it? We didn't know about it. If we know already, we will be written in the debit side of the cash book. But now it is credited into our bank account, so bank passbook will show very good information under the credit column. So 2 lakh rupees is credited by Raghu. So Raghu is a debtor who is directly deposited rupees 2 lakh into our bank account, and it is increasing the available balance also. Available balance. So available balance will show already available balance is 30 lakhs. Now 32 lakh it will show. Then we are comparing the both the cash book bank column and bank passbook. Definitely this bank passbook will be more than the cash book. Fifth timing difference is interest and dividends collected by the bank. On behalf of us, interest and dividends are collected by the banker. So we can discuss about it in detail. When the bank collects interest and dividends on behalf of the customer, who are customer? Whoever opened the account in the bank, they all are customer for the bank. So now our firm are we are the businessman, isn't it? You are the businessman, you are playing role. So you are the businessman, you are considering as a customer, you are an account holder in the bank. So when the bank collects interest and dividends, what's the meaning of interest? Actually, interest, I told you, for current account holder, they won't give any interest amount. How bank will credit the interest? You can think about it. Actually, if you are getting if you are invested some amount on debenture, the company will give interest money to you. That interest money directly will be received by the banker, but banker will not intimate you. It will be in your bank account, it will be credited to your bank account. At the same time, what's the meaning of dividend? If you are a shareholder, you will be receiving the money from the company as dividend. Dividend means it's a profit for a certain percentage of share, isn't it? So that is directly deposited into your bank account, like what we have discussed earlier. Our debtor directly deposited to our bank account. Likewise, now our business, you are the shareholders. For all the shareholders, all the transaction will be done through only banks. So that company, particular company, so you are the shareholder for that company, they are crediting some amount called dividend to you. That may be interim dividend or usual dividend, so whatever dividend it is, so they are transferring the amount directly to your bank account. So bank receives on behalf of you because you are the customer for the bank. Then these are immediately credited to the customer's bank account. To your bank account it will be credited immediately, but you don't know anything about it. whether it is credited or not. So definitely you will not be returned. You will not be returned in your cash books. So cash book and the bank passbook will show the different informations. And next very important timing difference is direct payments made by the bank on behalf of the customer. On behalf of the customer, bankers are paying money, which is auto debit. Auto debit. So automatically the amount will be debited each and every month from your bank account. Let's discuss about it in detail. Sometimes the customers give standard instructions. Standard instructions, if you already intimated to the bank, to the bankers, to the instruction, as per your instructions, standard instructions to the bank to make payments regularly on stated days to the third parties. For example, telephone bill, insurance premium, rent, taxes, etc. So this and all you already gave instruction to the bankers. So you pay. You no need to ask me each and every month on particular days whether I can pay the money or not. So if it is 31st of every month, you pay rent, my rent, and you pay my telephone bill. So how much it is comes? You can do auto debit. So likewise, you given the permission to your banker. So it will do auto debit, isn't it? But you doesn't know about it because already you intimated, and apart from that, you did not write anything in your cash book because you don't know how much amount exactly the bank was debited in your bank account. Exactly how much amount they have debited, you don't know, isn't it? Because each and every month our TB bill, which is called a telephone bill, will change, and electricity bill will change. Isn't it? Rent will be fixed and salary may be fixed, and apart from that, then next, are directly paid by the bank on behalf of the customer. You are the bank customer, so you are a customer for the bank. So you told to the banker, you debit money each and every month, 31st of the month or 30th of the month, last date of the month, you can debit from a bank account likewise. Or directly paid by the bank on behalf of the customers and debited to the bank account. Yes, this amount is reduced in your passbook. So when you are comparing your cash book with your passbook, definitely it will show imbalance amount, difference amount, isn't it? So this is also one of the timing difference. Seventh timing difference. It is very important actually. Somebody will think it is somewhat difficult to compare with others, but it is very easy. Listen this. Check deposited, bills discounted, discounted. What checks you deposited to the banker that was discounted? At the same time, you drawn the bill. That bill, you asked the banker to discount the bill, but banker discounted. They try to discount it, but it is discounted. Actually, you are the person who is enjoying overdraft facility from the bank. So at the time, instead of money, you are depositing a check to the banker, but bankers are discounted your check. They are discounted your check. At the same time, you wrote a bill. That bill is also discounted by the banker. Let's discuss in detail. If a check deposited by the bank is discounted or a bill of exchange drawn by the business firm is discounted with the bank is discounted on the date of maturity, the same is debited to firms, especially customers' account by the bank, as this information is not available to the firms immediately. There will be no entry in the firm's cash book regarding the above items. This will be known to the firm when it receives the bank statement from the bank. As a result, the balance as per the passbook would be less than the cash book balance. Yes, of course. But you are thinking after you deposited the check to the banker, you will be returned in the debit side of your cash book. But actually what has happened? That deposited check is discounted by the bank, isn't it? So at that time your amount will be reduced in your bank passbook. So which is amount was debited in your bank account, isn't it? At the same time you drawn a bill of exchange. You will study in chapter number 9 in detail about it. What's the meaning of bill of exchange? Actually it is a very big process it is. Instead of giving money, they will write and give a bill. So that bill you wrote and you gave to your banker to discount. but bankers are not ready to discount your bill. So they discounted your bill. So in this situation, your bank account balance will be deducted by the banker for how much amount worthable checks you have deposited and how much worthable bills you have drawn to the banker. So everything is fake now. Banker comes to know. So automatically that same amount will be debited to your bank account, isn't it? So this you will comes to know after get the bank balance, which is that bank statement. Then only you will compare that cash book with bank passbook. Definitely some differences will be there in the closing balances of cash book and bank passbook.